Good morning and welcome to our first panel of the day. Today's session is about, the theme of the day really is about the role Fintech will play in the recovery. During the last year, Fintech has been under the spotlight and shown us all really the value. It gives me great pleasure to introduce our first panel. And the subject matter is going to be the role of Fintech in the recovery. What's changed and what are the opportunities post-COVID? So without further ado, I'm going to bring Doug onto the stage, who's moderating, and he'll introduce his panel. So please give a virtual round of applause to our panel. Thank you.
Thanks very much, Johnny. Yes, and as Johnny said, today we're going to be talking about how we're going to build for the next generation, really, because of that fintech recovery. What role can fintech play in so many different industries to get people and various different verticals back on their feet? And joining me today on this panel, we have Dr. Saul, the founder and CEO of Innovative Assessments. We have Rugile from the Fintech Investment Advisor, Investment Lithuania. We have Erez, the CEO and founder at CRiskCo. And we also have Michaeli, the general partner at Viola Fintech. Guys, thank you so much for joining me. That was quite the mouthful there, but I think the best way to kind of kick off this session is if we could get you guys to kind of, as a round robin, introduce yourselves and what you do for, in a few words or less. So to kick things off, Saul, could we come to you first, please?
Yeah, with pleasure. Good morning, everyone. So, as you said, I'm founder and CEO of Assessments. At IA, we use ultra-brief psychometric surveys to help evaluate creditworthiness based on a borrower's personal character. So we do so as a means to augment traditional models and also to help otherwise underbanked customers qualify for affordable credit. So we're sort of an add-on. To date, we've evaluated over 1 million applicants from 20 different countries, and we work primarily through online lenders and retail banks.
Incredible. Thank you very much, Saul. And Rugile, could you give us a bit of introduction to Invest Lithuania and yourself, please?
Of course. Well, good morning, and thank you very much for having me here. So as you already presented, I'm Rugile, Stonyte, a Fintech Investment Advisor at Invest Lithuania. Invest Lithuania is the official governmental agency for foreign direct investment and business development. And we help international companies to discover opportunities in Lithuania and support them to get their business set up and off to the best start possible. So I have been with the agency for almost 3 years, and through that time I've worked with a number of fintechs that have established their engineering centers in Lithuania or are now regulated by the Bank of Lithuania and have their compliance and operations teams there.
Excellent. I'm going to be excited to hear about all the difference about how fintech can help in Lithuania as well as Israel. And with that in mind, as Erez as well, could you give us an introduction to yourself, please?
Of course, thank you. So good morning, everyone. My name is Erez, and I'm the CEO and founder of CRiskCo. CRiskCo was established 6.5 years ago. A US-based company with Israeli office. We have offices in New York, Tel Aviv, and Brisbane, Australia. What we do, we democratize the underwriting procedure for businesses. We connect between business owners and fintech lenders and banks to allow them quick access and easy access to the underwriting procedure and the data of the businesses. With our help, businesses in Mexico, in the US and Australia are able to apply for financing and actually getting those financing they need, if it's loans or different types of credit that support their goals. And I'm super excited to be in the panel and see and talk about how fintechs can help and grow the economy after the COVID-19 epidemic.
Thank you so much, Erez. I'm really excited to hear that real worldwide perspective from you there. And Toma, could you also give, as the last one there, a bit of an intro to yourself as well, please?
Yeah, hi everyone. My name is Michaeli. I'm your general partner at Viola Fintech. Viola Fintech is a $120 million fintech-focused fund based out of Israel, but investing globally. We're actually part of a much larger group that's called Viola Group. Viola Group is the largest tech-focused investment group in Israel, and we are, the vertical investment arm. We've invested to date in about 10 companies, actually a little bit more in Israel, Europe, in US and even Singapore, RegTech, InsurTech, banking tech, of course, payments, and so forth. Maybe one more thing important to mention is the fact that Viola Fintech is backed by leading global financial institutions such as Scotiabank, BNP Paribas, Travelers Group, Siam Commercial Bank, and so on. We work very, very closely with these financial institutions to understand their needs and to match, interesting startups to these financial institutions and others. We've been investing for about 4 years now. Some notable companies like, Plank, Insurify, Rewire, to name a few, and many others.
Brilliant.
Yeah, great to be here.
Thank you very much, Tomo. So I think really what we need to kind of lay down in terms of how we can understand the question more is to kind of understand the role fintech played before the pandemic and see if that's changed going forward. So Rugile, could I come to you? In your view, what was the fintech industry's role pre-pandemic? Was it really there to democratize financial services, or was it just to disrupt the large institutions that maybe hadn't been enabling all these exciting innovations?
Thank you, Doug. I definitely believe it was both. Fintech companies developing cutting-edge technology, they can streamline slow and costly procedures and deliver powerful financial solutions. And, from user-friendly banking apps to blockchain-driven currencies, they have been reshaping the industry for sure. And, they are providing much more improved services. Traditional banks, they were focusing on the entire ecosystem of the products, while fintechs, were going into the niche and providing that service very well. Furthermore, they kind of reinvented the marketing of their products, like introducing gamification to attract, more consumers. And as well, I think, they introduced better value by, providing, having leaner business operations and saving some customers some money. But at the same time, I think, while disrupting, they were also collaborating with financial institutions to see that continue into these times. Of course, banks, they have a strong suite of products and they can scale them to make them cost effective. Well, fintechs can go probably more into innovative space, but this collaboration between, financial incumbent institutions with fintechs is very important, and they have been doing that. And at least for Lithuania, we have done a survey, and about 70% of fintechs here are collaborating with traditional banks. And of course, open banking movement, it's opening up the data from the financial institutions, incumbent ones, is helping as well fintechs to enter this segment.
Amazing. Thank you so much, Rugile. And with that in mind then, Saul, if we look forward then into the 2020s, going forward, what role do you think fintech can play in building that recovery with that in mind?
So I think you asked me, right?
Yes.
So I think basically it's going to continue in that direction, and perhaps even be sped up. I can't speak to fintech necessarily in general, but from our little niche in terms of credit and finance, basically what we've seen is even pre-pandemic was, offering more accessible solutions, offering new data, and both of those things I think with the pandemic have been shown to be super important. So just for example, we've been saying, even pre-pandemic that, when the financial landscape and the economy changes, some of the traditional models, in credit, for example, are less indicative or less informative than perhaps they used to be. And that's, I think, what we're seeing now. And so taking new data, which is more forward-looking as opposed to historical, applying, cross-disciplinary data, and what we're trying to do, for example, we've seen has been a good complement. So I think probably that's the direction, now that lenders and banks and FIs have seen that these things are actually working. My guess is that it's going to be, same direction and perhaps even faster adoption now.
Interesting. I think that the credit side of fintech is probably one of the more important ones that has a role to play in the future of democratizing fintech. So with that, Erez, could I come to you and get your perspective about maybe how the pandemic might have enabled this new role for fintech to play going forward at an accelerated rate, like Dr. Saul just said? Could I get your perspective on that, please, and how the pandemic has changed that role?
Sure. So first of all, during the pandemic, we saw both fintechs helping banks and replacing banks where banks were not able to perform. We saw Fundbox and Cabbage in the US becoming the leading point of getting PPP loans or grants from the US. And we saw Tesla, that is a core providing a company in Arkansas, providing an easy to implement solution for thousands of community banks to help their businesses to apply for PPP. So we saw both sides of the map helping and supporting. When we go into the next step, and now we're coming back to provide loans in the US, but also in other markets that are always working, they can't rely on the past. And if we take 2020, for example, this is a year that you cannot rely on the data to make a decision. And this is a very critical point in time where, okay, we want to provide financing, we want to help the economy and the businesses to grow and come back to normal life or normal economy, but we are not able to rely on the data that we used to rely on. And the history of 10 years in business doesn't help. 10 years in business up to 2019 doesn't mean anything about 2021. And with this case, they need to be creative and find new solutions. Adding to this one, the movement to digitalize the platform. Even the farmer in Missouri doesn't go to the bank. He expects the bank to be available on the cloud or on a phone call, and this is a huge change from 2 years ago. And it means that everybody's moving in to find digital solutions to help them to reach and to react and to interact with their customers. And I think that fintechs in global will have a critical play in this world.
Interesting. Now, Toma, can I come to you then in terms of, do you agree with Erez? Do you think that the pandemic has meant that from now on, you can't say that being in business 10 years matters too much, because ultimately the ecosystem is so different in finance now that you have to really play by different rules? Do you agree with that?
Well, they taught me that for panels to be interesting, you need to have some disagreement. So I have to disagree. Well, I think that, the pandemic changed many things, but it didn't change human nature, and it didn't change corporate culture and corporate mentality, which I think was the main reason why, fintech innovation and technology innovation was progressing so slowly within the traditional, financial ecosystem, with banks and insurance companies and so on. And while it definitely accelerated some things, I think that, assuming that things go back to normal, and at least according to what is seen here in Israel, things are going back slowly to normal. I think that the pace of innovation in the traditional financial ecosystem will, slow down again. I agree, by the way, that, consumers and small businesses are expecting, financial solutions to be more, online and more sort of like fintechy. But I think that most of that need will be addressed by startups in fintechs, and less by the big techs, and less by financial institutions. I think that financial institutions will go back to their, for the most part, to their normal, being very risk averse and very slow moving and so on. Because again, I think that it's very, very hard. Even a global pandemic doesn't change that culture. That's what I think.
Yeah, interesting. Do you think that Rugile, if I could come to you, do you share in Toma's view there that maybe the large FIs, the very traditional ones, their culture hasn't changed? Even if the technology has, there's still going to be that very slow to innovate model or I'd love to hear your perspective from Invest Lithuania. What's the ecosystem like over there, and do you think that the financial institutions haven't learned anything from 2020?
Well, I hope that they have. It's of course difficult to see it from the customer perspective, because from the customer perspective we see that they're adapting and they're trying to catch up with the fintechs and offer innovative solutions, and they're trying to partner with those fintechs. But of course, within the organizations, of course, they are more traditional banks, huge corporations. It's difficult to change. It's difficult to adapt. But I definitely think that overall, COVID, the need for digitalization, not being able to go to the physical branches, also, the health concerns around the cash. I think it kind of introduced a lot of interesting dynamics, and many of the banks definitely are putting efforts to change. Whether they will be able to do it soon enough and catch up with fintechs, we'll see.
Interesting. Now, Saul, could I come to you, please, and ask, why do you think the traditional institutions have just kind of kept at this pace before? I mean, obviously there's legacy systems, but you think after 2020 that would have changed. Do you also agree with Rugile and Toma in this state of what the FIs will be in the 20s?
Yeah, partially. I think things are changing for sure. We see, for example, a greater appetite for, adopting new tech now. Whether that's going to be rolled out mainstream or left kind of as niche, that remains to be seen. But I think a few things have happened. One is that, the technology has allowed for relatively, very young FIs or fintechs to develop mature and very successful products. So, take Nubank in Brazil with 34 million customers in less than 10 years. Lemonade, you guys talked about, Cabbage and Fundbox and the rest. There's a lot going on. But then when you look at the traditional banks, I think it feels to me that they may have like a greater responsibility to their customers, to their constituents, to be more cautious than some of the fintechs who can take more risks. And I think that's changing, but there's still that, industry culture, the company culture. So yeah, it's going to be interesting to see where it goes, whether, they adopt the fintech solutions, whether they develop them in-house. I think the future is going to be interesting, and there's a lot going on both in the banking and the non-banking offering financial services, as was also mentioned.
Yeah, and I think that's really where I want to take this conversation further. And Erez, I'm going to come to you with this really big question now. For the first half of this discussion, we've been mainly focused on how fintech is going to help finance, but the role to recovery isn't just changing the finance industry. Fintech has the opportunity to help numerous different industries get back on its feet. So can I ask you, do you have any use cases that you can think of or you can point to where fintechs are actually going to help various different industries post-pandemic get back on their feet?
Well, I've seen two new products that are getting more and more traction in the market that are interesting to look at as a trend of fintechs actually helping and becoming partners with the business owners. One of them is POS financing, the ability to finance with the usage of cash flow and understanding how the business runs, and to basically purchase advanced receivable, not necessarily as invoices and asset, but more as an understanding of how the cash flow runs into the business. And a second product that is getting more and more interest and is basically purchasing a percentage of your future revenue for the next 2 or 3 years. And this is actually becoming a trust issue, because it means I trust this business to survive for 2 or 3 years. And I believe that if I give them 6 times or 10 times the current cash flow, I'll be able to establish a good relationship and to grow the business to get back to the revenue in the next couple of 3 years from percentage of the revenue. And it's more like again, it's not like a traditional loan when you give someone money and you expect to get back and you only look at the return. It's more of investment with the business and help them grow together in the next months or years.
Interesting. I think that's going to play a huge role for a lot of small businesses. And there's been a lot of campaigns in the UK to really start looking after the local business, the small business. And I think you make a really good point there, Erez, about how fintech can actually change the dynamic between cash flow and how these businesses thrive. Tomer, could I also come to you, please, and get your perspective where you see fintech playing a role in various different industries? We've already heard about how it can help with credit financing and SMEs. Do you have any other perspectives about how fintech can help?
Yeah, I mean, I think that, to be honest, you're asking the wrong question. I mean, I think that, I think the solutions are there. It's not about, what new solutions will come. I think that the solutions are there. I think what the pandemic really accelerated is, customers' willingness and honestly, they just don't have a choice to adopt these new, solutions. I think that, some of these solutions that Erez mentioned, already being offered to a certain extent by companies like Clearbank or Ancap or others, right, or Fundbox. But it was just, very few businesses or a low percentage of the overall industry or businesses in the industry were willing to use these services because they could still go to the bank. During COVID, nobody could go to the bank. So I think that's just really, sort of like forced all these consumers, small businesses, e-commerce businesses that now thrived and all of a sudden had, cash flow issues because, there was huge demand and they couldn't finance, their purchasing. And really forced them to use, ready, solutions that were already there. We're just waiting for them, for that time of need. So I think that really what COVID changed was the fact that it pushed all these SMBs and consumers, basically forced them to use these kind of services. But going back to your question, I think that definitely anything that will accelerate recovery. I think these are the solutions that really will enjoy most of the interest from SME and consumer perspective, be it cash flow forecasting or growth or enabling growth loans, either from the private sector or from or government funded, anything around e-commerce, making it more or by the way, anything that makes businesses more efficient. It can be also on the payroll side, it can be on the insurance side, it can be on the financial transaction side, etc. So I think these industries will definitely enjoy a lot of tailwinds in the next.
Yeah, it definitely sounds from you that fintech has a role in just streamlining operations from very small businesses all the way to the large ones, and especially for the SMEs, they're typically very time poor. So being able to have that sounds amazing. Now, speaking of improving financial well-being for businesses, Saul, could I come to you and look at the individual and how fintech can play a role going forward in improving financial well-being for the individual and everything around that? We've seen, for instance, Headspace, the application for meditation, even start offering financial help and well-being. So I'd love to hear your perspective on this as well.
So I think that's a really important part. I agree with Tomer that the technology and the solutions were there already, and some of the problems already. So take, for example, the underbanked, which people have been talking about now for a long time. So, 1.7 billion people around the world who don't have accounts, formal bank accounts, another billion or so who have dormant accounts. So there's, a huge portion of the population, this is, pre-COVID, who had limited credit histories. And, you guys touched on that for small businesses who also have a difficult time getting credit because of a lack of sort of traditional business metrics.
Yeah.
But taking those together, so there's solutions out there that have been focused, and even initiatives, government initiatives, and certainly organizational initiatives who've gone out there and say, okay, how can we bank the underbanked? How can we provide affordable and accessible credit to people otherwise underqualified? And I think what has happened in COVID now is that has only grown. In other words, that same perspective of looking at people from a different point of view and saying, okay, is this person creditworthy? How can I fund this business by looking at other metrics? And now, as Erez said, I think before, is that some of the historical data is less relevant. So all of a sudden, you're looking at a much greater population from a similar perspective. And some of those solutions that were developed previously are now more widely applicable. So again, just from our sort of niche where we're working, so we've seen that even small data solutions can augment traditional models. We had one customer, for example, administer 300,000, 400,000 evaluations to sort of re-qualify people who were previously declined, marginal declines, or thin file, and we're able to reapprove a portion of them, not a huge portion, but enough for them to go from approving 20% to 25%. So it's a 20+% increase on their approvals, and there's good, trustworthy, responsible people out there, and some of these solutions are, as I said, were around before, geared towards a specific audience, and now have a bigger audience. So hopefully we'll see that continues.
Yeah, that's absolutely incredible. I mean, that must mean the world to that individual, even if it does sound, as you said, it wasn't all of them, but that means a lot to them. And I think that's going to be so important. It's such an important fintech story going forward.
Sorry. So just to kind of go back to the individual, as you said, so getting a small loan could be $500 to fix your car. It could be the difference between a single parent being able to get to work and not losing their job and dropping the kid off, and it could be fixing the refrigerator in the pizza shop. These things have long-term impacts on the economy and on individual lives and well-being.
Incredible. Thank you, Saul. So, Rugile, I want to come to you with this because I think there's a lot of similarities in terms of being an incredibly digitally savvy consumer base with both Lithuania and Israel. So, Dr. Saul mentioned just then that there is an increase in demand in the amount of data that's being presented to all these different fintechs, and as a result, we can pull far more exciting and realistic data from these people. So do you think we're seeing an increase in demand from digital savvy customers for a better banking experience that might actually even be on par with the tech giants like Amazon and Google going into the next decade?
Definitely, for sure. There's increasing demand for more innovative products from the tech-savvy consumers. I think with the experience of fintechs that we have, our financial literacy is growing quite a lot, and this is a great also a benefit that fintech, I think, brings to the society, because they grow another generation of more financially aware people. And I think also with the gamification that also I mentioned before, I think people get used to trying new products and trying new tools and having everything very flexible and very easily reachable, on your phone, wherever you are. So definitely there's a push for even more, innovative products.
Interesting. Yeah, I mean, it's one thing where, to me, finance is almost considered. No one talks about it down at the pub, but people are starting to bring it up and starting to discuss. Well, hang on, I could get that service in another place. So, Erez, could I come to you as well? Ultimately, one thing that could stifle this new role that fintech could play is, I think we've discussed this customer experience, increased data, opening up new channels. Could this new role ultimately these as consumers go to brands like Google or Amazon, as we're starting to see those tech players actually start getting involved in the fintech industry themselves?
Yeah, that's a great question. First of all, I would recommend you changing a bar. Okay, go to a different pub and where people speak about fintech. But on the Google and Amazon, first of all, we see a lot of working together with fintechs. Like in Amazon, you can do POS financing. If you go to Amazon as a business owner or as a consumer, now you have options to pay term, to have different financing options that were not available before. Like I don't know, when we bought in Amazon 5 or 7 years ago, we were never seeing that you can actually buy something and deploy it and spread it for 12 payments. So it's definitely a trend that's going to go and be more and more engaging. I think also the big financial institutions pay attention more and more to Shopify, to Amazon, to those kind of platforms that holds a lot of data and holds a lot of transactions. And basically the marketplace in many places, mainly in the retail, moved online into those kind of platforms. And they want to understand, okay, how can we be involved? How can we reach there? How can we help our consumers? How can we be there for our consumers when they need us? And it's definitely going there. Would we, as a consumer, buy from Amazon Finance or buy from Facebook Finance or from Google? I'm not sure. And the short history, as we look in the past few years, we haven't seen success. We actually saw the difference. That we as consumers like to separate into boxes different products and different services. We like to have our bank to support our finance, while Facebook keep all our privacy and history and knows everything about us. We don't want to mix those together. And if this trend continue, I think that's going to be a challenge for Amazon or for Google or for Facebook to explain why we are the one to provide you financing, why we are the best one to do it. And I think it's a huge challenge in looking forward. So it's definitely, I don't see us going to Amazon Bank and using it as our home bank, but I do see a lot of collaboration between those tech giants and different fintechs and banks, big and small in the industry.
Interesting. That's a really exciting ecosystem to think of. And I think we are coming up to time, guys. So I'm going to leave it with Tomer. If I could also get your perspective on this. Now that we're having the tech giants like Google and Amazon coming in, do you think we're going to continue to see that segmentation of industries like Erez said, or do you think it's just going to become an absolute, just completely new, exciting ecosystem going forward?
Unfortunately, I have to disagree with Erez again.
Again?
But seriously, I think that if we will consume financial services not from the big techs, it's not because of either consumer preference or not because these big techs do not aspire to provide us financial services, because financial services are actually super sticky and great way to increase ARPU, especially in places where ARPU is very low, like developing countries. I think that the main reason is just poor execution to date, and maybe a little bit regulatory pushback. But I think that Google is already making great, advances and strides. The new Google Wallet is a complete revamp from what we've seen before. Amazon is providing numerous financial services without being, either a bank or an insurance company. So I think just a matter of time. These companies have all the resources. They have, billions of users. They know how to delight their customers. And let's face it, I think that banking as a service, which is probably one of the most interesting trends in these days, is just a tailwind for them, because it means that they don't need the regulatory license. They don't need even the infrastructure. Citi can provide them the infrastructure, but they can still be, the provider of these financial services. So I don't have a doubt in my mind that there's going to be formidable players in these in the financial services within the next 3 to 5 years. No doubt in my mind.
Interesting. Oh, guys, thank you so much.
Tommy, we should schedule for next 5 years to meet and discuss what happens.
Yes.
No problem. Probably sooner.
I think that would be a very interesting perspective after maybe the last 5 years to where we are now to the 5 years after that. I think it would be a very different ecosystem. So guys, I think that's coming up to time. So thank you very much for all your time and all your insights, and also to all the viewers on the session as well.
Thank you very much. It was
Thank you. Thank you, everyone.
Thank
you very much, guys. That was a very insightful panel. Thank you very much for sharing your thoughts with us as the first panel of the day. The pressure was on. Thank you very much. And if you, everybody else will stay with us.